Hey traders, in this video, we'll take a look at some tools that we can use to analyze a stock and look at some key inflection points. And we're just going to focus on three major indices today, the SPX, the QQQ, and the IWM. So for the SPX, we just have a plain chart that we start with. So there's no moving averages and no Fib series that are currently plotted, and we'll do that as we go along. So the first thing we'll do is we'll take a look at a trend line. So clearly what you want to do is you want to start the trend line from here, which is the top, and join the lower lows on that. So let's just use that tool, and we'll plot the trend line here. And so this is the major trend line in that. So one of the ways you can look at it and say that there's a decent chance at this stage the market will probably head into this 43.50 area. And then you can reassess, right? There's no certainty it's going to drop, right? Just because it dropped last time doesn't mean it's going to happen this time as well. But clearly this is a key point of inflection that you want to keep in mind and make a decision as to what to do, right? So suppose it starts to, break this level, because anything is possible in the market, then you don't want to be short the market. The second thing we'll do is we'll take a look at the Fibonacci retracement, and we'll draw it from the highest point to the current low. And in my studies, I've just restricted myself just to see the 61.8% and the 50% retracement. So those are the two things that matter to me. And as you can see, we've also taken out the 50% level. And so now why I consider this as an inflection point is because, you have the 61.8% as well as the downward sloping point, both around the same level of 43, 50 to 43.60. We can also throw in a couple of moving averages. The one I like is the 150 simple moving average, and the other one that I like is the 100 period weekly simple moving average as well. So I'm going to add those two. And what we see here now is that we've also taken out the 150 daily SMA as well as the 100 weekly SMA on the SPX, which is definitely a good sign. And so the next level that I'm watching is this level right around this area. I'll call it 4307. So we can draw a horizontal trend line on that and just keep an eye on this level into this week. So as you can see now, that back in April we had several attempts where we tried to break this level and it got rejected here. Now we're right at that same level here, and that's why I call this as an inflection point, and there's no guarantee, no certainty that it's going to drop once again at this level. But this is definitely something to keep in mind, because the market could certainly go sideways and then push through this level, and if it does, then your next level to watch is closer to this 43.60 level that I mentioned a little while back. So that's how I'm actually analyzing these indices, and without any bias, without assuming the market is going to drop here or go up, right? I'm just going to react to these levels as and when they come into play. So we can do the same thing for the QQQs here now. So we already have the 100-week SMA plotted and the 150-day already plotted. So one of the things we'll again look at is the trend line that we'll draw from the top. So we'll just move into the trend line tool and just plot the trend line right here. And one of the things we'll see is that in the case of QQQ, we have taken out the trend line, and we're fast approaching the 100-week SMA. So that would be the next point to watch, which is close to this 335.62 level. And we can do one more thing here. We can also plot the the fib levels here. We'll do the same thing. We'll plot from the top to the most recent bottom, which is 269.41. And one of the things you will see which is slightly different from the SPX chart is that while the SPX has already exceeded the 50% retracement level, in case of the Qs, we haven't, right? So we are actually close. So that's why these are the two levels that I'm watching. The other thing to watch is this cluster back again in April, where this level of 330, approximately 339, acted as a point of support, and once we broke that, the market obviously fell significantly. Now we are back at that level, and it's likely that this level that was prior support now becomes resistance. So that's why it makes it a little easy to now look at what are some of the key points on the chart that you want to track if you're a short-term trader or even a long-term trader. You can take a look at these levels. And finally, we'll take a look at IWM. And first thing we'll do is we'll plot the trend line, which will be somewhat similar. So if you plot the trend line, you can say this level is broken as well on the trend line. We're also above the 150 SMA. So the next level to watch really is the 100-week SMA average, which comes at 205.37. And we'll again draw the fib levels, and we'll do it exactly the same way as we drew it for the previous two indices. And you can see the chart is somewhat similar to the Qs, where we haven't hit the 50% retracement, which comes at 203. So there's a decent chance that given the slightly upward bias the market has, that we get to this level. And these are just good levels to keep track if you're trading, right? So if we hit this level and start to retrace, it might be prudent to take a part of your position off, or the entire position off, depending on your style of trades. Or once we get past this, the next level to look at is the 100-week SMA, and then the 61.8% retracement, right? So these are just simple levels that can be easily plotted using trend lines, as well as some standard moving averages. I like the 150-day more than the 200, but you can also experiment with the 200 and see where that level steps in. So hopefully this helps, and I'll see you in my next video. Bye bye.